Now, folks, let's talk more about this whole muni bond market thing. Many say trouble is brewing because of state and city budget deficits and a muni meltdown inevitable. Well, are muni bonds worth the gamble? Let's bring in Richard Cicerone, head of municipal bond research at McDonald Investments, and Peter Kaufman, president of Gordian Group, which advises troubled companies and governments. Peter, I was terribly interested in your notes to see you talking about Chapter 9 bankruptcy as perhaps the best way out for these localities. Can you tell us more?
Well, I'm not sure it's the best way out, Larry, but it's a powerful tool for municipalities. The real hesitancy is always how will the capital markets treat us down the road if we file for Chapter 9, which is the municipal version of Chapter 11. But Orange County was a major municipal bankruptcy filing in the 1990s, and they returned to investment grade soon thereafter. Chapter 9 has some real advantage for municipalities. Chief amongst them, you can compromise your bondholders, and you've got much more latitude in compromising collective bargaining agreements with unions, pension benefit contracts than you do on Chapter 11 for corporations.
Richard, let me ask you, one of the most compelling arguments that I've heard against muni bond default is the idea that paying this debt is only 10% of the regular operating budget. So it's kind of the last thing you would stop paying, kind of like the mortgage maybe. It's the last thing you would stop paying because it's just going to ruin your credit down the road. Do you buy that argument?
I do, and I think it's important to look back in history and those issues in which there have been problems have gone years with paying a penalty in the marketplace. Even New York City still has some penalty that would be paid for the fact that they had a problem back in 1975. Of course, they still have leftover deficits from that 1975, which reinforces that. But I think the fact is that when you talk about bankruptcy, it can be taken out of context. Very few governments still utilize that voluntary Chapter 9 that they're able to do it. Less than 10 last year, and only, we were talking about relatively small issues. And in the case of the Chapter 9, there is some protections built into them for bondholders, particularly where they have constitutional protection for debt service. And in the case of Sierra Kings Health District last year, Sierra Kings Health District got the court decision that you could continue to make your payments even while they're in bankruptcy because of the statutory protection that they have to protect GO bondholders.
Rick Santelli, at least one of the bond buyers indexes is trading up to about 5.5%. I believe it's up 150 basis points since October. Now, is all the bad news discounted? Do the bonds look cheap to you?
Well, I think if the hypothesis is all the bad news is out there, of course they do. But I think that's the real issue. I think it's very difficult to arrive at that statement that all the bad news is out. I do think that there's lots of cherry picking to be done. But just consider this, Larry, that the benchmark that everything's priced off of treasuries, sovereigns of high quality like bonds, like 10-year notes, they have acted a little squeamish today. These credit default for the U.S. popped a little bit today about the time we saw a sell-off. Any higher rates on that front is just going to put more pressure in the muni area. Keep that in mind.
Yeah, but Peter, there have to be munis that are getting punished just because they're in the group, and as investors hear muni bond, they think Meredith Whitney and get nervous. There's got to be good picks out there. How do you find them?
Well, I think that you've got to do your credit research. I agree with you. There clearly will be some good picks out there, and everyone's getting hit with the same brush. So it's really old-fashioned research, I think. But to me, the fascinating thing is that while municipalities can file for Chapter 9, states cannot. And I believe that that's something that Congress may have to deal with, because I don't believe that, particularly with the House of Representatives controlled by Republicans, that you're going to see bailouts of California and some of these other states with massive deficit shortfalls. And municipalities, I think once you see one or two of them that are prominent take that route, it's going to make it a lot easier for others to go there.
And Peter, what is the risk outside of, let's say, California, Illinois, New York? What is the actual risk? Because it seems like everyone's trading on those three basket cases. What's the real risk outside those?
Arizona, Illinois, Michigan, those would be those are the high risk areas, I think.
And what about the others? In terms of the states, not the municipalities, but the states. So what? 45 states are paper good?
I would say more like 40.
40.
Richard, how do you find the good picks in here? Is the investment worth the risk? I mean, that's our basic question. How do you pick through this mess and find ways to invest, or is it just too risky?
Whenever there's uncertainty, there's opportunity, and this is certainly the case. And when we talked about that index that had risen to a 5.25% last Thursday, the bond buyer index, which has been around the longest time in the municipal bond market, 5.25 translate to over 8%, 8.25% approximately if you're a top tax bracket investor. Even given inflation prospects going up, that's still a good opportunity for you if you can be selective about it. I think when you look at some of the things that we're talking about here, we're looking at a lot of GOs that are being lumped in the basket of being bad because of the uncertainty, even though many of them have very, very good, strong securities behind them and the cash flow behind them. Even in the case of Illinois, in 2009, they were looking at 22 times gross revenues of their debt service, to look at it in the reverse of that other ratio that you brought up earlier.
Rick Santelli, would you buy Illinois? I just want to hear. You are Mr. Illinois, Mr. Chicago, Mr. Fiscal Prudence. Would you buy Illinois after the Governor Quinn Democratic legislature tax hike?
Well, I don't think I'm worried about default, but no, I don't think the price is right. It's always about what price is right for the risk. And in Illinois in particular, I think that it was a good thing if you're a muni a quantifier, a researcher, to look at the fact they raised taxes before they came to the market with something in the neighborhood of $4 billion additional. But I think they don't have their spending under control. So I think there's many different types of Illinois muni debt that are going to be lower in price and even afford more opportunity down the road.
Interesting take. All right. Thanks, guys. Thanks to all three of you for joining us. Some really good information. When we come back, Boeing versus Airbus.